Let's get more on what we should be expecting from the local market. Evan Lucas joining us from IG in Melbourne. Evan, great to see you there this morning. Let's start with what happened on Wall Street overnight. We saw the US market reverse following some record highs hit earlier on in the week. We're seeing the beginning of a pullback, do you think?
Yeah, there's certainly the case to be made that that could be what we're seeing. There's two ways to look at it. If you actually have a look at what's going on in the US bond market, we've seen a real tightening of that 2-year to 10-year bond yield curve. It's come in by about 6 basis points and currently sits at 216 basis points difference. Now that's 2 basis points away from the low we've seen. That suggests that maybe US investors are getting a little bit nervous. Maybe the economy isn't going as strong as what some investors over there expected, and that's one way to look at it. You've also seen yields over there come well and truly right down, and they're now at 6-month lows, which also suggests, considering what we've seen in the ECB, which has created a bit of a bond market global rally, it's also sort of pushing that there. So some of the money that we've seen in the equity markets, particularly in the high price momentum plays, so your things like the NASDAQ that is starting to break down, is starting to shift away. So all of that is there, and if you also have a look, we're now coming also on the S&P to a sort of a tipping point with regards to whether or not it goes higher or goes lower over a sort of a 5-year period. And with QE3 now well and truly on the way out, what happens once that finishes? So there is examples of possible breakdowns and cracks starting to form across the US market that maybe we are in for a little bit of a correction, maybe we are in for a bit of a pullback, and it is starting to exhibit that. There's a little bit more intraday volatility, there's certainly more action in the bond market, there's not a huge amount of movement in the currencies, and we're now starting to see equities under downward pressure on a more consistent basis. So there's 2 days of downward pressure, 1 day of up. All that suggests that maybe we're in for a little bit of a consolidation at the end of May, start of June, July.
Okay, so that's equities. Let's talk about the Australian dollar now, Evan. It's holding the line pretty steady at the moment, despite the fact we've had a federal budget out here in Australia. What's the market pricing now, do you think, when it comes to the dollar?
Yeah, the dollar's a very interesting one, and yesterday's reaction to the dollar on the Asian trading side was very, very interesting. Did hold on to most of its gains that it saw yesterday, so it went through 94 cents, came off a little bit towards the back end of yesterday's Asian trade, and then all the way through yesterday it didn't, which suggests that the budget had one effect, and that is it was tough, no doubt about that, and I'm not going to deny that at all, but it wasn't as hard as probably what the positioning was going into it ahead of that date. So we did see the dollar go down, almost touching mid 92.5 cents, and it's bounced up quite hard since, suggesting that yes, it was a tough budget, but it wasn't as hard as it could have been, meaning that the RBA is now well and truly back in play. That maybe not as big a fiscal drag as some had estimated, only around about 0.3 of GDP. Some had it at 0.7% of GDP drag, and that means that yes, we may actually see inflation still going. Consumer spending may not have been hit as hard as what the market had expected. We're also therefore expecting to see still M&A material holding stronger, and the fact that we are going to see infrastructure spending happening quite quickly, particularly in Sydney and Melbourne, and that East Coast recovery all suggests that the RBA could come back into play and raise rates. So that's why we probably saw the Aussie dollar, not just against the US dollar, but against all of its major G10 pairs actually popping up yesterday and holding the line. So that's the interesting development out of the budget. Everybody is talking about it is tough, and there's no doubt it is, but it's probably not as tough as the market saw it, and that's why you're seeing the Aussie dollar actually swicking up. And again, the RBA now well and truly back in play towards the end of this year, start of next year.
End of this year, start of next year. Evan, that's when you see a possible rate hike?
Yeah, look, it's certainly looking that way, and the reason for it is that you are seeing the RBA themselves upgrading their GDP forecast. They certainly expect to see stronger than expected growth. It's still below trend, no doubt about that, but it's better than expected. The interesting thing, which is happening not just here in Australia but globally, is inflation, and they've actually sort of held the line, slightly downgraded their expectation when we saw that in the statement of monetary policy last week. So that's the only curveball that could be in there. I think if there is going to be a rate rise, it'll be this time next year, so May next year. I think inflation is the one area that they are always very, very hawkish on. They watch it very closely. It had ticked up in March, it's come back in, and it's holding the line. So that will be the key mover, and if inflation holds where it is, like it is at the rest of the world, then yeah, I think the rate rise will probably come this time next year. I'm not as bullish as some people thinking that it may come on basically what happens every time with Melbourne Cup Day, a rate rise around about then.
Yeah, Evan, what are we watching for in the market today here at home? We've got that lead from Wall Street. They've snapped the winning streak there just off the record highs. Not much happened in Europe overnight. So what's going to contribute to the local market at the open?
There's a couple of things today. You can certainly look to Asia. We have got the BOJ on the wires. Watching Governor Kuroda, he will certainly be very interesting. They're also releasing their GDP. From a more specific ASX perspective, it'll be the bounce back in the banks. They went ex-dividend yesterday, and the one thing that has been interesting to watch is the recovery of the banks from the going ex-dividend. So Bank of Queensland hasn't really recuperated their dividend. Westpac picked up a little bit, but not a huge amount. So now we get, watching what happened with ANZ. So now we've got to watch Westpac, NAB and Macquarie and see how they recuperate and whether or not there is a bit of an appetite still for the banks. I think there is. Maybe not coming today. The other one is BHP and the news that obviously they are now putting their West Nickel mine over in Western Australia on the table. It looks like it could be valued at around about $800 million. Very clever timing. A 10% increase in nickel over the last month is a very, very good time to be looking to sell out of this asset. It doesn't move the needle at BHP anymore, so a very clever time. You may see a tick up because that is an exciting thing, considering Andrew Mackenzie has said that he will probably put some sort of share purchase plan, share buyback, or he may put some sort of special dividend out there. This may be the start that we're actually seeing that some money could go back to shareholders, and that would be a very interesting thing indeed. We will have a negative day. Those leads from the US will put us backwards, so we are looking like dropping around about 24 points to 54.75 or thereabouts, which isn't too bad considering how strong the sell-off was last night.
Yeah, not too bad at all. Evan, thanks so much. Appreciate that.
Thanks, Kate.
Evan Lucas from IG there.